What's going on, YouTube? Welcome back to another great YouTube video. So today I'm having fantastic news. You are able to catch two trades. Yeah, today two fantastic trades. So I'm going to break down with you guys. As you know, we are continuing with the series Trade with Me series, whereby any setup that I'll be taking for the day, whether a win or a loss, I'll be sharing with you guys. I'll be breaking down the charts for you. I'll be explaining to you on how I was able to take that particular trade, and you see how easy it is. So if you are new to this channel, make sure you hit the subscription button and let's hop into the charts. So I'm not wasting time. Let's go directly to the charts and let's analyze together and show you how easy today I was able to catch uh, one trade. There were basically two trades, potential trades, but I missed one and the other one was able to catch during New York session. So the other one was during London session and the other during New York session. So let's go to the charts directly. So you know, guys, from my previous videos, you already know I start usually by marking my first big impulse move. As you can see, I'd already marked my big impulse move right there, and it's already a bullish big impulse move. Already marked my top high, as you can see, and my top low at that particular point. Then the next step, as you can see right here, there is my liquidity point. So basically, I said that my liquidity point is a point whereby prices are usually unable to break above to break below. Like it's a region whereby on a bullish big impulse move, we have a large concentration of buyers, and it is it's an area or a zone whereby we can look for potential buy opportunities. So as you can see right there, I have and I already marked this liquidity point as a broken liquidity point. So why did I mark it as a broken liquidity point? It was because at around 9 a.m. price broke the liquidity point. So when price gets broken, when a liquidity point gets broken, it turns into a broken liquidity point. That's why, as you can see, it's a broken liquidity point. So how did I was able to spot two potential trades today? So at around 9 a.m., as you can see, price broke my liquidity point. Then at around 10 a.m., price unbroke. You see, so immediately price unbreaks. We usually have a concept whereby we were supposed to switch to the 1 minute time frame, because this one at this particular point, that's where our liquidity point is located. That's where we have a large concentration of buyers. So immediately the 10 a.m. candlestick closes above the liquidity point, and it has unbroken it. Then we switch to the 1 minute time frame. So we start with the from 11 a.m. So we switch to the 1 minute time frame. It was around at what time? Yes, at 11 a.m. Yeah, 11 a.m. today. So go there, 6 time, 11 a.m. So we begin from there. So once you are already there, what our strategy usually entails is we pay attention to the first candlestick that will retest our liquidity point. The first candlestick is usually not supposed to break below our liquidity point, our broken liquidity point. So I'm going to name this our broken liquidity point. This is what our broken liquidity point is. So right here, this one is a broken liquidity point. So we usually start from the 11 a.m. candlestick. See, so we usually start from the 11 a.m. So the first candlestick that is going to retest this broken liquidity point should not break below. You see, so it can either close as a weak sell or a bullish candlestick. So as you can see in this case right here, it closed as a weak sell. So this is what we usually call a weak sell according to our trading strategy. So it already closed as a weak sell. So immediately it closes as a weak sell, it usually gives us the entry confirmation. So what we do, we usually is supposed to place our limit order directly on that broken liquidity point. So this is the trade that was during London session. So you could have placed your limit order at that particular point. Then we usually risk 70 pips. The reason why we are supposed to risk 70 pips, it's because price is allowed to close below. Like we can have, this is 74, this is 72 right there, it's okay. So the reason why I'm using 70 pips is because price sometimes usually can break below, like you can have a little bit of retracement to the downwards, you see. But the first candlestick usually supposed not to break below. So this is the beautiful trade that you have had London session. You see right there. Just because of the entry confirmation, the first candlestick should not break below. So what happens if the first candlestick breaks below? If the first candlestick breaks below this broken liquidity point, it usually tells me already alerts me that the 1 hour candlestick can either break below. I will cut this. candlestick, that like the amount of buyers are already weakening and the sellers are taking control of the market, so it will not be conducive for me to take that particular trade. So the price breaking below, it really tells me that the buyers have already lost momentum, the sellers are already taking control. But if the buyers, if the first candlestick enables it to close as a weak sell or a bullish candlestick, it already gives me a confirmation that we're having a large concentration of buyers at that particular liquidity point. Remember, we are on a bullish big impulse move, and the liquidity point is a point whereby when price reaches at that particular point, we are supposed to push the price upwards, you see. So that's how the trade during London session was a beautiful, clean trade right there with no totally drawdown. But sometimes there can be drawdown, a little bit of drawdown. That's why I gave it enough room, you see. So that's how a beautiful trade you could have catch the right there, a textbook setup directly from the notes. So the next setup appeared on New York session, the same setup, similar setup exactly, appeared during New York session. So let's check it out. So at around, as you can see, at around 3 p.m., price broke again our liquidity point. Then at around 16, at 4 p.m., price broke up again. So it is the same setup. It has appeared 2 times during London session and during New York session. Now you only a stupid person for you not to get the same setup during London session, and then New York session the same setup appears and you miss it again. So you are literally like you're supposed to be foolish and stupid. So you're going to apply the same thing. You see the one that I told you guys. The first candlestick in the 1 minute time frame, candlestick for 17 should not close below. That will be our entry confirmation. So what do? We switch to the 1 minute time frame, and it is the 17. We start from the 17 p.m. and let's check that. So at 17, it starts from here. So the first candlestick that is going to retest our liquidity point should not break below. So this one becomes our broken liquidity point. So the first candlestick should not break below. So as you can see, the first candlestick that came to retest after 17, it was around right there. So the first candlestick that should come and retest our broken liquidity point should not break below. As you can see right there, the candlestick will not break below. So that's usually we call it a weak sell. So what do? We just place our limit order at this particular point, because this one it already tells us that there's a large concentration of buyers. So what you are going to do is you're going to place your limit order at that particular point, and you just wait for a retest, you see. So as I told you guys, we usually risk 70 pips around there. So as you can see, so it was just also a beautiful trade. So how many pips would you have gotten in return? Like how many? Like almost 139 pips, as you can see. So it is a beautiful trade. So you can see, guys, the same setup has appeared during London session and during New York session, and all of it was just a win. So basically the same thing. This is a textbook setup directly from the notes, you see, guys. So that is today's trade. I hope you guys have learned something new today. So the main lesson today I can leave you with, the main lesson of today is that you can have the same setup. It can work during London session, and the same setup can fail during New York session. In this case today, we had the same setup that worked during London session and it worked during New York session. So whenever a same setup appears and it works during London session and it fails to work during New York session, that's how trading is, because it's usually a belief. Anytime you enter a trade, it's usually an edge. An edge is simply a probability of one thing happening over another. So you usually don't have a guarantee that it's going to work. So a setup, similar setup, you can take a similar setup during London session and it can work. And you take the similar setup during New York session and it fails to work. That's the nature of trading, because you are just dealing with the beliefs. The market is going to go in the direction where the greatest force is. So what are you supposed to do? You as a trader, you are supposed to take your edges consistently. You are not supposed to choose whether this is going to work. No, your job is to execute and let the market decide on which setup is going to work or on which setup is not going to work. So guys, if you found this video to be very educative, make sure you hit the subscription button. Continue watching my videos. I'll be explaining to you my trading strategy and how easy it is, and you'll try to understand that you'll get to understand that trading is really easy. Guys are just complicating it. So this is how beautiful today you could have killed today trading gold during London session and New York session. It's been your boy Joshua FX. Make sure to subscribe, and let's see you in the next video.